Good afternoon, ladies and gentlemen. Welcome to the Tissue REGENIX Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, you'll be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please, at any time, simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions and will publish any responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. If you could give that your kind attention, I'm sure the company would be most grateful. It gives me great pleasure to hand over to CEO Daniel Lee. Good afternoon.
Good afternoon, everyone. Thank you for joining us and spending some time with us as we would like to share with you an update on Tissue REGENIX and our performance during the first half of 2023. Again, we'll talk about our activities, some of the successful results, and our plans, our continued plans for the future. Disclaimer slide that should be reviewed by all. And then your presenters today are myself. I'm Daniel Lee. I'm the Chief Executive Officer for Tissue REGENIX. I was appointed CEO in November of 2020, but I originally joined the organization as the President of U.S. Operations in January of 2019 of this Cellrite division, which was an acquisition by Tissue REGENIX in 2017. I have over 30 years experience in medical devices as well as biologics, whether in small startup type companies or well-established organizations. The reason I joined Tissue REGENIX was that I saw Tissue REGENIX as a very unique opportunity as a company that was involved in regenerative medicine, but also had tissue products that were based on xenograft, which is potentially animal tissue or tissue not sourced from humans, as well as human allograft tissue. There are very few companies that have that opportunity to do both types of tissue. David?
Thanks, Danny. Good afternoon. I'm David Koch. I'm the Chief Financial Officer for Interim. I wasn't with Interim Biologics. I was getting to that, excuse me. Early Chief Financial Officer of Tissue REGENIX. I joined the group in January of 2021. I have about 30 years of experience in the medical device side. I started, ran, and then ultimately sold a contract manufacturing business. And along the way, I had the chance to work with Danny for several years at Interim Biologics, so now the appropriate reference. I started my career on Wall Street, first in investment banking at Salomon Brothers, and in corporate finance at GE Capital. And when Danny called me in late 2020 about this opportunity, and I started to do my due diligence, what really drew me to it, besides having the chance to work with Danny again, which was a great excitement to me, was also to learn the nature and strength of the relationships that Tissue REGENIX has with its strategic partners. A company like Arthrex. Arthrex is a $4 billion privately held sports medicine company, one of the largest in the world, if not the largest. They can work with the leading tissue processors in the industry, and they do. But for their core demineralized bone matrix products, they choose Cellrite, our division in our BioRed segment. That was pretty compelling due diligence for me. So excited to talk to you more about our business today in the first half of 2023.
Thank you, David. Now we'll move into the formal presentation. So for those of you, a little bit of an overview of the company. Tissue REGENIX, we're a global healthcare organization focused on the area of regenerative medicine. For those of you who may not be familiar, what regenerative medicine is, it is a discipline of healthcare where we try to regrow, replace, repair cells, tissues, organs, using the body's innate ability to heal itself. Now, we focus, our focus in regenerative medicine is in the area of tissue engineering, where you're using tissue-based scaffolds to act as the base of the healing for regenerative medicine. Our tissue-based scaffold utilize two core technology platforms, BioRinse and Dcell, which both share the objective of preserving a lot of the inherent biologic, biomechanical, as well as biomechanical properties of the tissue, but also making sure that the tissue is safe and sterile, but we're also maintaining a lot of those inherent biologic properties. Our manufacturing facilities are based in 3 locations. We have a facility in the United States, one in outside of Leeds, as well as a joint venture in Germany. Our product portfolio is produced from numerous tissue platforms, and as a result, we also have products that are utilized in a number of different surgical specialties. As David's already mentioned, we have some significant strategic partners that are industry leaders, but we also do distribute our own branded products in a number of markets. Certainly, one of the things that's unique about Tissue REGENIX is that we're a company that's well positioned to be a contributor in transforming healthcare through regenerative medicine. So some of the highlights for the first half of 2023, we've continued to focus on our 4S strategy, since it is the foundation of growth for the group. When we look at our financial results, we continue to see revenue growth as well as sustainability for the organization. Our group revenues during the first half of 2023 grew by 19% over the same period in 2022. So we went from $11.8 million of revenue to $14.1 million of revenue in H1 2023. In H1 2023, we also demonstrated a positive adjusted EBITDA. Now, in the same period in 2022, we had an EBITDA loss. Now, if we look at specifically the divisions of our organization, our BioRinse division, that business grew by 20% in the first half of 2023. That growth came from growth from our existing as well as new partners. Our Dcell business grew by 29% in the first half of 2023. And this was due largely in part to that we've gotten broader and deeper in the regions in which we distribute. We also saw margin improvements in our business from 49% in H1 2023 from the 46% in H1 2022. On terms of operational highlights, we've talked about in the past how we've improved our tissue supply. Now, another important part of our growth and our capacity is our ability to produce more tissue products. And during the first half of 2023, we were able to produce 15% more units of finished good products. We also added a new product line for our sports medicine allografts, which I'll talk about in just a few minutes. And we also needed to increase our production of our OrthoPure XT product, due in part to the demand from the markets in which we are currently distributing, and as well as interest in additional global markets. A little bit about the overall market research when it comes to regenerative medicine. Independent market research certainly talks about the growth of regenerative medicine. but I wanted to kind of take the opportunity to drill down into specific markets in which which are more relevant in which we participate. So when we look at the bone grafting marketplace, this market is growing at single digits, and with a compound annual growth rate of about 6.1%, which will in 2028 is expected to be just shy of $6 billion. Now, when we look at the competitors in this marketplace, and we specifically look at other tissue processors that produce demineralized bone matrix products or bone human bone allograft products, these include companies like MTF, and these are all companies, U.S.-based companies, MTF, LifeNet, RTI Surgical, and Xtan. A number of these players are in revenue in the several hundred million. Another product category in which we participate is in the soft tissue marketplace, and that marketplace also is expected to grow at single-digit rates with a 5% combined compound annual growth rate, which will grow to just shy of $16 billion in 2027. The key competitors in this space include companies like Interim, Organogenesis, Mimetics. A lot of these companies focus on soft tissue products for wound care. So we have the opportunity to gain additional market share in not only regenerative medicine, but all these surgical specialties. And we'll continue to maximize the ways in which we can produce tissue products that address unmet clinical needs. A little bit about the product portfolio for TissueRegenix, and we categorize them into two processing technologies. The BioRinse technology platform, this is utilized to describe our bone as well as birth tissue products. This platform generated about $9.4 million worth of revenue in the first half of 2023. For the bone grafting products, our flagship product is a product called Concentrate. It's a demineralized bone matrix product, DBM. Clinicians enjoy using this product because it handles well, but more importantly, it is a product that's produced from 100% bone, and we help ensure the quality of the product by testing every single batch of this product for osteoductivity. Since it's important for the clinician when they use this product to form bone, if they're using it in an orthopedic procedure, spine, or as well as trauma. AmnioWorks, this is our birth tissue product. Also, it utilizes the BioRinse processing technology, and the features of this product are that because of the tissue processing and how it minimizes the effect on the tissue, surgeons like how the product handles as well as how it works once it's been used clinically in applications such as ophthalmology and/or potentially wound care. Then we also have the Dcell processing technology platform. And this is a processing technology that was developed at the University of Leeds. This processing platform generated about $3.1 million in revenue in the H1 of 2023. The leading product that utilizes Dcell is DermaPure, which is a human dermis product. It's known, it's unique in that we're able, with this processing technology, to remove 99% of the DNA. And what that results in is a tissue product that is readily accepted as well as incorporated once it's implanted. It's important to know that the Dcell technology platform is not only used in human allograft tissue, but it's also used in producing our xenograft tissue products. Byron's technology platform performed quite well, as we saw 20% year-on-year growth over H1. This was driven mainly by our demineralized bone matrix products, our amniotic membrane products, as well as our release donor tissue. Byron's products are utilized in numerous surgical specialties, and we distribute this product with a number of different strategic partners, which include Arthrex. Our partnerships continue to be strong as our business grows with our existing partnerships, as well as with newer partnerships that we have added and will continue to add. As you can imagine, this business is very unique, where our materials are very unique. We're using human tissue, and we use specialized processing. So it's very important that we continue to drive our growth by making sure that we have enough donors as well as processing capacity. And the slide on the right indicates how, since 2019, we've been able to not only have enough donors, but also double our processing capacity for our BioRich products as we continue to find ways to become even more efficient. Our Dcell business, which is predominantly revolves around our Dermacure product, the restructuring of our commercial operations in 2022 continues to demonstrate benefits. In H1 2023, we saw 29% growth for this business, and this growth came from getting broader and deeper in the regions in which we currently distribute in the United States. Part of this strategy, just like in 2022, was to add distributors, add more opportunities to have our products exposed to customers. So far in 2023, we've added 25 new distributors, and we're targeting to add 32. So we're well on our way to achieving that goal. Another product line that is utilizes our Dcell technology is our OrthoPure XT product. This is the only non-human tissue-based product that is approved for use in ligament reconstruction procedures. This product, we introduced this product in late 2021, and we continue to see interest on a global basis. So as a result, we needed to increase our production of the XT product, and we increased production by 37% for this product, not only for the markets in which we currently distribute, but the additional European markets that we plan to add in the near future. We also expect additional growth from new markets such as China and Australia, which we announced during the first half of 2023, which will come online once we get regulatory approval. We did launch a new product line. This was our BioRinse Sports Medicine soft tissue allografts. This announcement was made today. Sports medicine allografts represent over a $300 million market opportunity just in the United States. We had historically had sports medicine allografts, but our market feedback indicated we could make this product better. So we made changes to the processing, which not only produced a safer product, but one that was more in line with current market expectations. So our goal was to continue to maximize what we had and create additional distribution opportunities, which include capturing a larger share of this $300 million market opportunity. In H1 2023, again, we continue to focus on our 4 S's, which is the foundation of growth for our organization. Supply, as I already mentioned, we've increased our ability to produce more product. 15%. We saw a 15% increase in the number of units of product that we produced in H1 2023 versus H1 2022. On our OrthoPure XT, we increased our unit production by 37%. And of course, the other aspect of supply that's very important is continuing to look at our supply of donor tissue, and we continue to add new donor supply for our business in first half of 2023. Sales revenue, as I've already mentioned, we saw our sales revenue increase in BioRents by 20%, and then for our Dcell business by 29%. Sustainability, we demonstrated a positive adjusted EBITDA. David will go into further detail how we've had a positive adjusted EBITDA for the last 12 months. So that's something that is quite an achievement for our organization. And then scale. When it comes to scale, we are not only looking at opportunities to continue growing our business in the United States with our existing distributors as well as new partners, but we're looking at growth opportunities outside the United States as we gain the necessary regulatory approvals over time. So at this point, I'm going to turn the meeting over to David to talk about some operations as well as financial results.
Thanks, Danny. I think Danny had already mentioned that the phase one expansion created capacity for sales of over $40 million. That's about 33% more than we had originally estimated. But it also allows us to react more quickly to changes in market demand and hit the bid on new pieces of business opportunities in almost about half the time of our previous lead times. We've increased our capacity by a lot of blocking and tackling types of activities. We've optimized schedules. We've re-engineered processes and cross-trained technicians so they can do multiple jobs. When one room is down, they can move over to the next room and after degowning and regowning, participate in another processing activity so their time is more fully utilized. We discussed this on our last set of results in March, but the phase two expansion, given the efficiencies that we've created, we can push that out a year further than we thought, 2025, while still meeting the sales objectives that we've set for ourselves and within the marketplace. Chart on the right is kind of a measure of our efficiency. It's donors. We weight the donors by the type of tissue. Some donors we can process in 4 hours. Some may take multiple shifts. And depending on how much processing time is involved, we weight them, and then we compare that to how many full-time employees we have in the business. You can see when Danny came on in January of 19, there's a modest uptick in 2020 through the pandemic, but really the more dramatic changes in our efficiencies come in 2021 when we moved into the expansion, and then those continue into 22, and now we're seeing it through the first half of 2023. So very pleased to see those efficiencies continue. Have a quick review of the income statement or P&L. Danny usually says all the good stuff and leaves me with the boring pieces, but to hit the high points again, group revenues were up 19%. Both of our franchises, BioRents and Dcell, were also up significantly. BioRents up 20% and Dcell up 29%. Moving down the P&L, our gross margin increased to 49%, 46%. And again, tightly managed our overheads. Our operating cash expenses were up 11% against that 19% sales increase. And that allowed us to have the adjusted EBITDA profit of $0.4 million against a loss in the prior period of $0.5 million. And again, as Danny said, on a trailing 12 months basis, profitable. And finally, just to highlight the growth track record that Danny's put together. This is coming out of the pandemic. This is the 6th consecutive reporting period of growth and the 5th consecutive period of double-digit half-on-half growth. In fact, if you look at that half-on-half growth over those 5 comparisons, it averages over 20%, at 21.5%. So very consistent growth that we've generated here at Tissue REGENIX. Take a quick look at the balance sheet. Our cash position of $4.1 million, that supports our current business plan in operations. So very pleased with that. Our inventory levels, again, Danny mentioned that's something that we monitor closely. They were up 13%, whereas sales increased 19%. And more importantly, our turnover remained consistent. Our inventory turns relative to our cost of sales remained consistent to prior year levels. On our accounts receivable, our collections actually improved 12% from where we were the prior year. In January, we announced, and then in our trading update, and then more fully discussed in our March results, our extension of the mid-cap funding facility, our revolving credit facility, and we increased that facility from $5 million to $10 million, and then extended the maturity through January of 2028. We really didn't need that for our business plan, but it seemed prudent to have that flexibility as we continue to grow and scale the business, to have the revolving line of credit. Further to that, by extending the maturities, better aligned with the capital growth needs of our business.
So in summary, we continue to make progress on our core strategy, improving our tissue supply, improving our processing capacity, demonstrating above market revenue growth, making additions to our product portfolio, as well as developing operational efficiencies. Now, these operational efficiencies and capacity, this allows us to make the products in demand, whether it's Environs or Dcell. And certainly, as we continue to capture additional market share, continue above market growth, we will continue to need that capacity. As David described, we'll continue to make progress in terms of profitability. We've demonstrated now positive adjusted EBITDA for the last 12 months. We will also continue to expand our business and grow our business, not only in the United States, but also outside the United States as we obtain regulatory approvals. So far, in the first half of 2023, we were able to increase our group revenues by 19%, and it is something that we expect to continue on, certainly for the second half of the year, as the market expectations are for us to continue to grow our revenue, as well as continue to demonstrate profitability, which will, of course, hopefully drive shareholder value. And most importantly, our cash balance continues to support our current growth plans for our continued organic growth of the business. So that ends our presentation. At this point, Mark will take some questions.
That's great. Daniel, David, thank you once again for updating investors, and I will just bring back up your camera. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while David and Daniel take a few moments to review your questions submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, is available via your Investor Meet Company dashboard. Daniel, as you can see, you've had a number of questions from investors this afternoon, so thank you firstly to everybody for your engagement. If I may, Daniel, invite you to open up that Q&A tab. If I could ask you to read the question, and then I'll pick up from you at the end.
Okay, very good.
I'll read the questions, and before we start, we mentioned this in March, but if anybody of our retail investors watching or the video, you can go to the FinCap, our broker's website, and they have a very nice research note on tissue REGENIX that you can get access to. It's at no charge. You just have to register. I think give your email address, but a very nice research note by Mark Brewer. I would encourage all to register and get a copy of that. In addition, we'll have some commission research by Hardman very shortly. So some more detail around our first half results. And in addition to, Danny and I would like to thank everyone who's joined this call. I saw in one of my notes preparing for this, we've got over 100 people attending. So we enjoy having the opportunity to interact and answer questions on a live basis with all of our investors. So thank you for participating today. So, okay. First question. Given the company's excellent recent progress, which is not reflected by what remains a pretty dismal share price, are there any plans to move to NASDAQ?
Certainly, the question about moving to NASDAQ has been raised before. It's something that we continue to keep on our minds, not only on the minds of us as a management team, but also with our board. But at this point, there are no plans to move to NASDAQ.
When do you expect sales to escalate? I'll maybe address that. I think it's important when we talk about sales growth and sales growth rates is to have that in context of something. And, I think Danny covered in some detail the growth rates of the segments in which we participate that are growing into the mid-single digits. And our businesses are growing at 3 to 5 times the growth rates of the segments they participate in. So we feel pretty comfortable with the growth rates of our core businesses moving forward. When you couple that with the 19% growth we just announced, 6 consecutive periods of growth, 5 periods of half-on-half double-digit growth, we feel like we've done a pretty consistent job in growing much faster than markets over an extended period of time, not just for 3 months or 6 months, but for an extended period of time coming out of the pandemic. Are you considering any acquisitions?
When it comes to any acquisitions, we remain open to considering acquisitions. It is an opportunity to inorganically grow our organization. That's all I can really say. I can't really, even if we were considering any acquisitions, I wouldn't be able to share that information on this platform.
When do you anticipate that the successes you have had in signing distribution agreements will achieve regulatory sign-off and, consequentially, begin to impact tissue REGENIX growth?
Wow, if I could predict the timing of getting regulatory approvals, that would be quite the accomplishment. We've been very diligent working with the various regulatory agencies in the markets that we're trying to enter, trying to get these approvals. It's just been a difficult process getting timely responses, timely action. So, but once we do get those regulatory approvals, we continue to identify distribution opportunities, distribution partners for each of those markets. It's not something that we're doing in a serial manner. Obviously, a lot of our activities are parallel path, regulatory approval, and also finding the right distribution partners.
Why are the finance charges allocated to BioRinse and none to Dcell? I think historically, before I joined the group, the preponderance of the sales revenue and assets were related to the BioRench segment, so that's where the debt lay. So over time, as those change, we may move that allocation. We tend to look at the finance charges more at the group level and less so at the operating unit level. So we've got to put them somewhere for the different units, but that's why it's been done that way historically. Anything we need to know about the decrease in rest of world sales in H1 2023 compared to H2 2022? I don't think there's much to take away from that. Oftentimes, one stocking order, whether it's in 1 month or another month, can move that preponderance of the business. So as the XT begins to ramp, we'd expect to see that number grow in the rest of the world. Year to date, other than the GBMV, which has been flat pretty much year on year, it could be one large order either way that pushes that preponderance of sales. Roger asks, I see that you sell to the market your excess supplies of tissues. How long can they be stored?
It depends upon the tissue, but some of the tissue can be stored for up to 5 years.
Roger asked another question. I looked at the finance charges and see that they increased from 0.4 US million per semester to 0.7 US million in this last half, but you paid a 0.25 million exit fee. Had that exit fee been amortized, or was it all expensed this last half year? You're correct, Roger. I think hopefully I wrote that down somewhere. I'm pretty sure I did. That we did expense that, and that's why you did note that the interest expense spiked up. The interest rates have run up, but that exit fee, and I want to clarify, it was an early payment of a fee that was going to be due regardless of when we eventually paid off the line. When we went from 5 million to 10 million, that just triggered that payment earlier than at maturity, but it wasn't an additional fee or an incremental fee that we paid. It was just an early payment of that 0.25 million. From Lawrence H. Are products derived from decellularized fish skin a potential threat?
Certainly, I think you're referring to the products that come from a company called Kerecis. Certainly, it is another competitor in the marketplace. I think I think some of the long-term data has been positive for that product. When it comes to products in this marketplace, whether it's fish skin or human dermis, it's all about the execution. It's about the product performance. So I think it's healthy. It's healthy competition for clinicians to decide what is the best product for their patients.
Richard E. asks, when do you expect regulatory approval in China and Australia?
Australia, it depends upon the product. In Australia, we are looking at not only the OrthoPure XT product, but also human allograft tissue. Now, with the OrthoPure XT product, we're hoping, because it is a CE mark product, we're anticipating that product to be approved sooner than the human allograft tissue. But as for me to describe timing, again, I wish I could predict how quickly regulatory approvals can happen. With respect to China, I think we've described how the regulatory approval process for the XT product in China is going to require a clinical trial in China. That has not started yet. We are currently in the process of seeking some of the earlier regulatory approvals. It comes in phases, and so once we're able to complete this phase, then we can initiate the clinical trial in China. And I think we do not expect getting regulatory approval in China till 2025 at the earliest.
We're looking at a lot of questions here. Martin H., I assume that all the sales growth is due to volume. Have you had any discussions with partners and customers about price increases to cover ongoing personnel costs and inflation? So, Martin, we did in our BioRent segment put through a price increase in 2022. We did not put through a price increase this year. And in the Dcell segment, we have contracts that are multi-year contracts, so it's very difficult to put through a price increase in the Dcell segment. So we haven't decreased our prices, but we've not put through another price increase. Richard E. asks, when do you expect to run out of capacity without building new facilities?
I think we previously described how our last year, when we built our phase 1 capacity expansion, we expected the revenue potential to be $30 million, and then once we moved into our phase 1 expansion and we became more familiar with how we could utilize the facility, how we could optimize our scheduling, look at ways in which we could optimize our protocols with this newfound flexibility, we reassessed the capacity, the revenue potential for this capacity expansion, and we believe that this will run out of capacity with our phase 1 when we achieve the $40 million of revenue potential. And so that basically means that we don't need our phase 2 expansion till 2025.
Richard E. asks, when do you expect your first pre-tax profit? We can't make forward-looking statements. We get in trouble with the regulators, but the research report here, I'll point you to, it says a profit before tax of $0.4 million in 2024 estimated. Lawrence H. asks, what capex is required for phase 2? And I think we've said historically 3.6 to 3.8 million, 3.6 to 3.8 million US dollars. Alistair L. You have explained that you don't need the 10 million revolving credit facility to support your growth plans. Does this mean you don't need to make further drawings, or that you're expecting to pay down the balance of your borrowings whilst you're implementing your growth plan? I think we do not expect in our growth plan we have to amortize our term loan. We do expect to amortize the term loan in accordance with the terms over the next, I think it's $500,000 a year over the next 4 years. We had 1 year interest only on the term loan. The revolving credit facility, we would intend to keep that as we grow. When we do our planning for the year, we never assume that we need the revolving line of credit and that we can fund our operations from the existing cash of the business with no further draws to the revolving line of credit. in future years, if we need to upscale it, if it makes sense to continue to grow and scale the company beyond like 2024 to upsize that revolver, we would pursue that because it just makes good business sense. We'll also pursue, as we become more profitable, a more cost-effective lending solution. MidCap has been a good partner, and we can prepay these loans without penalty. And if we can find a lender that really wasn't available to us in the future, we will avail ourselves of that. We're getting to that point financially that we can go to a lender that may be more economic than MidCap. Lisa T. Given that we are now approaching 30 million annual revenue, but have capacity to support 40 million at our current rate of growth, when do you expect to start phase 2 to ensure we are not constrained by capacity?
We anticipate that it will take to have the phase 2 completed. It will take 12 months. So we would probably be looking at beginning planning, getting the approvals, getting all the designs ready 18 months in advance of the need for this toward the end of 2025.
And Lisa, it's also important to remember that 30 million, you need to reduce that by the GBMV or German joint venture, which doesn't call on those resources. And then you could also reduce it somewhat for the released donor tissue, which doesn't call on our processing resources. So it gives more flexibility than if you just took a quick glance at the numbers and you need to adjust for those things. Richard K. Please make it clear where your tissues come from.
Our tissues that we process come from predominantly from recovery agencies in the United States as well as North America. They come from, we work with a number of different recovery agencies around the United States. So geographically, it's spread out over the United States. And we continually look at adding additional recovery partners as the demand dictates.
Roger F. has a question. What is the percentage of shares held by UK retail investors approximately? It's on the quantum of 40%. I think we've addressed all.
Perfect. That's great, Daniel. David, thank you very much indeed. I wasn't sure quite to interrupt you or not, but thank you, and perfect timing as we come up to the hour as well. So thank you to everybody for your questions this afternoon. If any other questions do make their way into us, we'll obviously make those available to you guys. And if there's any other responses, we'll add them to the platform. Daniel, David, I know investor feedback is particularly important to you both, and I'll shortly redirect investors on the call to give you their feedback. But I wondered if I may just come back to you, Daniel, just for a few closing comments, and then I'll redirect investors to give you their feedback.
Well, again, today what we presented was our interim H1 2023 results. I think what we've been able to demonstrate through our results is that we managed to deliver on some of the investor expectations, revenue growth, as well as profitability. And certainly, this is the our mid-year report, and we remain confident and optimistic about our performance for the second half of 2023.
That's great. Daniel, David, thank you once again for updating investors. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can really better understand your thoughts and expectations. Please, it only takes a couple of moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Tissue REGENIX Group PLC, we'd like to thank you for attending this afternoon's presentation, and good afternoon to you all.
Thank you all.
Thank you.